Good morning, everybody. Hope everyone's doing wonderfully well. It is the game plan. My name is Gareth Soloway here at Verified Investing. You saw me lifting a little bit of weight here. This is 100 ounces of silver. Don't forget, 2 days away, we are drawing for this again on Thursday. Live drawing right here on air for who of the followers of Verified Investing, either on YouTube or on Twitter, will get this. And it does weigh a hefty margin. I will say you don't want to drop this on your foot. It's an Engelhard, again, 100-ounce troy ounces of silver right here. All right, on that note, guys, I'm going to put this down carefully here over here, and we're going to get right into the action. We have plenty to discuss, so let's get right into the keys here of the day. So here's our morning blast at Verified Investing. Number one, weak durable goods orders, all right? So data came in weaker here. Now, the kicker here is that if you look at durable goods, we were already expecting a minus 4.9% number. Came in at minus 6.1, all right? Previously, we were at 0, so this is a weakening of durable goods orders, even weaker than expectations. Number two, we have core durable goods orders also coming in at minus 0.3. And again, it was expected to be at 0.2, previous 0.6, and that was a plus 0.3. So again, still, again, a little bit, believe it or not, weaker than expectations. All right, a couple other things here to go over, guys, as again, we continue on. This is one of the big points I want to make today, folks. So if we look at these numbers here, insiders continue to dump stock. Now, you might say, well, why is that a big deal? Well, because they're insiders, and they're not just dumping a little bit of stock. We have Zuckerberg, Bezos, Diamond, Benioff. Benioff's been selling basically $3 million in stock per day since December. All right, Zuckerberg's unloaded hundreds of millions of shares just in the last month or so. All right, Bezos has unloaded billions, I repeat, with a B, billions in stock just over the last couple weeks. Jamie Dimon's been unloading $150 million in stock. Now, again, you might say, oh, well, they have a lot of stock. What's the big deal? Well, it's a big deal because these aren't small unloading amounts, right? I mean, it's not like they're unloading 10,000 shares or 20,000 shares or even 100,000 shares. They are unloading massive amounts of the stock here. And remember, look at these names: Zuckerberg, Bezos, Diamond. These companies, you're talking about Meta. How much information does Meta have of inside information on what the economy is doing? Think about the billions of global users, the hundreds of millions here in the U.S. alone. How much information does he have, and what is causing him to unload? Now, again, they are called kind of automated sales. Automated. Oh, it was done. It was programmed in ahead of time. Well, sure it was, right? I mean, they can't obviously show shareholders in the world that they're just unloading it willy-nilly. So again, just keep that in mind. Zuckerberg, Meta, think about the information they have that you and I don't have. Bezos, Amazon.com. Think about what customer data they have in terms of buying habits. Are people buying more? Are they buying less? Bezos, again, unloading billions of dollars in stock. And Jamie Dimon, the CEO of JP Morgan Chase, arguably the biggest financial firm in the world, or one of them. And think about the information he has about everyone out there that banks or is involved with JP Morgan and what the inside action is doing, right? All of these companies here are probably too big to fail, and they all their heads are dumping stock like it's going out of style. And let's not forget, Zuckerberg's building that bunker in Hawaii because he knows what's coming. And again, not to get too crazy on us, but again, when you see things like that, and by the way, a lot of these billionaires are building bunkers, it does tell me that there's going to be trouble in the future. When in the future? We don't know. We know the 100-year cycle's coming up. That's, again, later this decade. We know, obviously, the turmoil on a global geopolitical basis. We know just internally here in the U.S. what is going on, things that need to be paid attention to. All right, Bitcoin. Bitcoin hit a key 786 Fibonacci retrace. That's something I'm going to go over in the charts just shortly. Nancy Pelosi effect. Now, again, her greatest trade potentially was those NVIDIA call options. She ended up making over $1 million on them. She literally, or at least it came out yesterday, she bought PANW calls, $1.25 million worth of these, and look at what the stock did. Now, again, that's not her doing. Like, she doesn't have insider information. This is called the Nancy Pelosi emergency effect, which is when a trader or an investor or someone else, and in this case just someone in the government, when they do something and it results in such a wide media coverage event where they make so much money, there's going to be programs and individual investors that will buy anything that she's buying now. And so what we saw yesterday is Palo Alto Networks jumping tremendously, and believe it or not, it's up again today pretty sharply. Now remember, they got crushed last week on earnings. To be honest, it was into support. Good job for her in that situation. Like, I was looking at the chart, I was like, dang, this is a good support level. In fact, let's speaking of which, maybe she watches the show, but let's bring up a chart here of Palo Alto Networks, PANW. I want to see if my lines are still on the chart here. Doesn't look like they are, but if you go back to the game plan just last week, what did I show you guys? Maybe she watches the show here, but look at support right here and look at this range right here. And we can see right there, I mean, look at this. This is great technical support. If you're a technician, I mean, all of this sideways chop is amazing, and look at the price. And by the way, price today is up around 320 in the pre-market. Okay, so I just wanted to kind of cover that because I do think that that's interesting. And again, we'll see what her next play is. But heck, man, maybe she's the guru out there. Maybe she knows everything. Maybe it's insider info. Who knows? But ultimately, she is doing pretty well at investing. All right, next up, we talk about Jamie Dimon here. Jamie Dimon saying that there's a better than 50% chance of a U.S. recession. I put this on here because it's not really breaking news. Like I've said this for a long period of time, that the Fed has almost never engineered a soft landing. So it makes sense that, again, as we start to see more and more of these pieces kind of fall out of place, we've talked about them in this game plan. I talked about the reverse repo yesterday. Again, I hope I explained that well enough. But think about reverse repo being a bucket of water, and the Fed is a sponge. And when banks park money at the fund, the sponge is soaking up all the water. And right now, the Fed is squeezing that sponge, and all the water is flowing back into the system or into the glass case there where the water is housed. And essentially, that's liquidity flowing back in. It explains a lot why the markets have been so resilient in terms of upside. Apple breaks major support. It's still unconfirmed. Let's keep an eye on that. We'll go over the chart shortly. This is an interesting one. Eli Lilly falls on Viking Therapeutics' remarkable weight loss drug results. Now, this is going to happen with NVIDIA, guys. Same thing. You have these kings of the castle, right? This Eli Lilly amazing weight loss drug, but every other pharmaceutical is like, man, we got to get in on that. The margins are incredible. The money's incredible. Look what the stock price did for Eli Lilly. It's one of the biggest companies in the world. And ultimately, this Viking VKTX surges 100% today to the upside. Now, would I buy it up 100%? Hell no. You don't do that. You don't chase. You don't do that. But for the most part, this makes me think that Eli Lilly is very close to a top. We'll look at that chart in just a second. Lastly, Workday, guys, or a couple others. We have Workday and Zoom. Remember, in this game plan, if you watched this game plan yesterday, guys, I showed you the chart of Workday was like this, right? This was the chart of Workday. What was the RSI? RSI was like this. That's called a negative divergence going into earnings. What happened to Workday? It's fallen to the downside today. So again, RSI leading the way and telling us that. Lastly, Zoom again up about 10%, maybe a little less than 10% at this point as it's come back in. The point being, if you look at a Zoom daily chart or weekly chart, in fact, we can go to it right now. Let's take a look at that right now. I want to show you this here. If we jump to that chart, here's your daily chart, but I'm going to go to your weekly, right? If we look at the weekly, look at this chart. Look at this. Okay? Now, do you think expectations are sky high for earnings when it reported yesterday after hours, or were they relatively low? Well, look at the stock price. The stock price is literally at the base bottom level. It's like at fire sale levels, meaning that they did not have to do a lot to beat earnings. If they just said anything positive, the stock would most likely rally. And what did they do? They said something positive. They basically did a little bit better than expected, and the stock surged to the upside. Now, again, conversely, if we take a look at not PANW, but let's see, Workday. Look at Workday. Let's zoom out. Let's go to the weekly Workday chart. Okay? Look at this chart on Workday and what it's done. Right? Again, let's flip back here. Here's the Workday chart. Look at the run it's had from, this was $120 right here. Going into earnings, it was trading north of $300. $120 to $300, basically since November. That's not that long ago. It's only late February at this point. Look at that move. And again, then you mix in the daily RSI negative divergence. Let's flip over to that, which is what I showed yesterday. Again, I did hear some of you guys did take this trade. It's risky. Anything into earnings is risky, by the way. But nonetheless, this one did pan out. But look at the price and look at your RSI sloping down, negative divergence, and price again on this is trading down here. Now, it's not down a ton, meaning it's not down like 20% like Palo Alto, but nonetheless, it's a nice drop. It reminds us that there is tops to things. Eventually, things get too bloated, and they have to come back in, a la something like an NVIDIA or SMCI. All right, couple other charts here that I want to go over, guys. Going back to the insider selling, I do want to show this chart. This is a really important chart for us to recognize, and it's more of an alert, right? A lot of the stuff that I'm bringing to you in this game plan, it's meant to kind of keep reality, because if you tune into mainstream media, if you go on social media, everything is like, oh, be long, put every ounce of money you have into the market or into crypto, just throw it in there and just walk away and you'll be a millionaire tomorrow. And to be honest, I used to think that way, and I got crushed. Now, again, is it possible to still lose money when you think my way? Absolutely. I still lose money, no doubt about it. But the point is, it's about taking your head out of the sand and looking at things logically, right? Too many people keep their head in the sand. They don't want to hear anything else. They want to be in this kind of this sound box, this kind of earmuff place. And ultimately, if you look at this, what is this showing us? This is insider selling in the last 60 days. And there's no doubt, folks, that look at this. I mean, look at that move to the downside. More and more as current time has come through of insider selling. Almost no insider buying. And again, I remind the retail crowd out there, I remind you and my friends out there that are watching that insiders have way more knowledge, because especially of these big companies like Meta and Chase, JP Morgan Chase and Amazon, the amount of information that these CEOs are privy to would knock even some of the greatest institutions out of bed. They have so much insider information on what the consumer is doing. So when I see this is something that makes me very aware when you put the pieces of the puzzle together that I've shown you from yesterday about reverse repo and the ending of the Fed's banking program, the emergency banking program. When you look at some of these other cracks in the ice that I've been showing you, this type of stuff does make me very aware. And it doesn't mean, by the way, it doesn't mean I don't have any long positions. There are still things to go long, like IWM. I mentioned that in the title today, guys. IWM still looks great to me. I still think it's a fantastic catch-up trade. But again, you have to be aware that you just probably don't want to close your eyes and blindly follow the momentum trades here. All right, a couple other things here, guys, as we go through. I do want to touch base quickly on the QQQ. Qs again, notice this chart here, guys. This is that long-term chart going back to the 2000 period, right? The dot-com bubble. The reason why I want to show you this one more time is the same thing on workday is showing up on this chart. It's showing up on the S&P chart. And again, what I mean by that is on the monthly chart, what we should see here is we should see RSI, generally every high should be higher high. In the very least, this high should be, again, higher high, right? You had high from 2022, the QQQ NASDAQ 100 making a higher high. The problem is, look at this. Negative divergence on the RSI on the monthly chart. And again, the monthly is a very powerful time frame. It's much more powerful than the daily or the weekly. And what that tells me is you have to be on alert. Right? You have to be very, very careful. You could even argue that when you look at this little pop going into COVID, right? So I think this was this was COVID right here. But again, right here with the 2018 decline, look at the monthly, and then even that was a negative divergence before the 2022 drop took us down like that. So again, little things like this, pay attention to, because it is a decent precursor to a potential market drop. All right, and again, I'm still in that camp where I think something is lurking here in March, very possibly, that could take us down sizably. Just going to a couple others here, guys. Just remember this channel here, or this wedge pattern. Again, notice how same sort of thing, right? Price has been going up, RSI down, right? So again, same sort of negative divergence right there. And by the way, RSI isn't the end all be all. It's just one of many things in your tool belt that you want to look at. For me, I look at RSI, I still look at these charts, and really when this breaks down here, that would be a trigger, right? So you have your trend line, but then you also see the RSI divergence, and you wait for the trend line. Once that cracks, you should get a bigger move to the downside. All right, couple other charts before we jump over here. I do want to just take a look at what we're seeing here on Eli Lilly. Eli Lilly in the pre-market. Again, it's not a big move on Eli Lilly. It looks a lot bigger than it is, but nonetheless, down a couple percentage points. I mentioned that Viking Therapeutic, new weight loss drug. And again, like I said, when the margins are there, this is, by the way, this is one of the greatest things of capitalism, is that when there's an area where people are making massive amounts of money, lots of other people jump into that. And what does it do? It drives down price. And so for consumers, that's why capitalism is so good, is because when you don't have monopolies, Amazon, other things like that, right? I mean, think about this. We were just talking about this in the office the other day. It's like, could anyone ever start a new Home Depot and actually survive? There's no way. It's just not going to happen. There's these big mega consumer plays out there that there's just no way competition can grab a foothold at this point. All right. So again, that's just the nature of it. But the point is, at least with Eli Lilly, there can be competition. There can be multiple weight loss drugs, more and more, and price will have to fall because for Eli Lilly to sell it to consumers, eventually, if they have other options that are cheaper, then Eli Lilly has to drop the price as well. All right. So in any case, just something to keep an eye on there. The other thing to look at here on the daily chart, look at this trend line here. Whoop. Let me just zoom out a little bit so we can see it. But if we look at this chart here, again, take a look at this longer term trend line on Eli Lilly going all the way back here, right? Look at that move right there, and we did just hammer on that level. Should denote a pullback. It did pull back here. Then you got a little in spirit of inside bar action. My guess is you're probably heading back to this area around 600 to 625. Look at that beautiful level of support right there. And again, that would be a short-term target zone for trading. Okay. Other than that, let me see if there's anything else. I think we'll jump to the center screen here, or just let me jump to this screen actually. We're going to come over here, guys, real quick. What we want to do is just take 30 seconds to thank iTrust, and then we're going to get into Bitcoin, gold, natural gas, and all these other things. So take it away.
Do you have an existing IRA or retirement account? iTrust allows you to buy and sell crypto, gold, and silver all right within your IRA. And the best part is they make it simple. All you have to do is transfer your preferable amount of USD through iTrust and then invest that into crypto or precious metals on the platform. To get access, use the link below to find out more about investing through iTrust Capital.
All right, guys, so we're back right here. Let's get going on this chart. So a couple things I want to go over here. We have Bitcoin surging, right? We had this channel. We've now broken above this. But there's a caveat here, right? So there's a caveat on this chart of what we want to see. And again, what I want to look at here is whether or not this stops at the 786 Fibonacci retrace, all right? So again, let's go to the Fibonacci retrace levels here on the charts. And as we put them in, I want to show you what we have. I'm going to actually go to the weekly so we can see it a little bit better. All right, so again, the weekly fib, if we look at this, okay, look at what we just hit. Right, so right up here, this is the 786 Fibonacci retrace right above 57,000. So that is our next level of resistance, right? That's our next level of resistance right here, and we'll have to watch and see. And I don't know if you guys can get the cameras a little bit more straight. Yeah, there we go. That's a good view right there. Beautiful. Thank you, guys. All right, so a couple other things to look over here. So we know we have resistance right here on the chart, right? So we have this line of sight right in this area here. But again, that question is if we push through this, this is going to be the big one. If we get through like 57, 58,000, then you're likely headed up towards your all-time high and a retest of double top. Now, again, eventually Bitcoin will retest and take it out. It's not a question of if, it's a question of when. The question is, do we get a big pullback first, or do we just continue straight up? And again, that's what we'll find out. I will say, and again, you guys know I like the transparency aspect, but I did add to my short on Bitcoin above 57,000, and again, brought my average to around 54,000 and change. So again, for all those people that somehow think I'm short from 33 or 35, again, make sure you pay attention. Got to know your levels, and you got to know the trades. Okay, so that's where I am right now, guys. Pulling back just a little bit off that level. Let's watch. I do think there's a major level here, so just keep that in mind. Now, looking at a couple of the other cryptocurrencies out there, let's go to Cardano. Cardano quickly. One of the things on Cardano here is you're slowly coming up towards, number one, you're still below this pivot. So again, that's a little bit concerning that Bitcoin and ETH are continuing to surge, but we're not seeing Cardano take out this recent high. Now, maybe it'll play catch up. That's always the hope with altcoins. But again, at this point, you have two levels to watch. One is this high here, which is around 65 cents. And then your second level is right up here, basically around that 68, 69 cent level. So again, we'll see if it can take out. The one thing you would not want to see, guys, is you don't want to see Cardano come down here to 50 cents and get below 50 cents. That would be a big negative right here. That would be a big breakdown. Look at this trend line going from here, right, all the way across. And again, if it broke here, that would be, again, it would probably head down towards this lower area there. All right, couple of the cryptos real quick, guys, on Matic, Polygon, and like I said, every day I'll try to cover three, and well, two including Bitcoin. But on Matic, you do have a double top here. So again, we are into a little bit of resistance right up here. And again, starting to hammer on this 105, 106 level, which is double top. If we look at the bigger picture on Matic, is there hope that if we break out, this thing could really push higher? Let me just refresh that there. And the answer is yeah. I mean, if you actually took out this 105 to 110 level, there is a secondary pivot from 2023 right up here at around 150. So there is that chance. But first and foremost, you got to get through this first level right here, right around 105 to 110 on the chart. Okay, let's go on to gold real quick. Let's continue to rummage through here and see what we have. Gold is upticking just a little bit today, not a whole lot of price action here. But again, we're still, to me, it looks like we're making a bullish consolidation pattern. So again, we draw a trend line there, we draw a trend line right there, generally parallel from this move up. If we draw a little thing right here, we put some stars in here, and we do some lines, there's your flag right there, right? So that's your classic bullish consolidation flag pattern. We need to break above here, and then really this is your zone, right? If you go back all the way back till 2020, this line in the sand at around 2075 has been there for a really, really long time. And it's honestly, even when we pierced it here, it was a quick pierce and it got rejected, closed above, never confirmed, and it continues to kind of consolidate. My guess, again, my 2 cents on this, is that when the markets falter and then we actually get a stock market pullback, money will put, even if it's not a lot of money into gold, it'll be enough to push it up above this level, which will then cascade the momentum trade to turn over to gold. Like once you break out and confirm above here, the momentum players, again, under-allocated for retail and even institutional investors. The only players that are decently allocated, by the way, central banks. They continue to buy billions and billions in gold over and over again. Silver today bouncing a little bit after weakness yesterday, guys. I don't really have much to talk about on this chart. It just continues to be in this bigger wedge pattern. The only thing you want to be concerned with is any sort of breakdown below here, but ultimately you're looking, if you're bullish on silver, you want to see a breakout up there. All right, next chart on we go here. Let's take a look quickly at the chart of oil, and oil is creeping up again, guys. And again, to me, I got to be honest with you guys, this looks bullish to me. All right, whatever, even if the U.S. gets a slowdown, my belief is that the stimulus being pumped into China is going to start to speed up their economy, right? We talked about the Russell starting to do well. I also think the K-Web and some of these other plays could be on the verge of big catch-up trades. We know Japan's more surged higher, but look at this pattern. I mean, it almost looks like a nice little cup and handle, right? Look at that nice little cup and handle pattern. Now, granted, the breakout doesn't happen until you get above 79, but a close above 79 should take oil to $85 per barrel. All right, quickly here, guys, a couple more charts to go over real quick. If we look at the chart of nat gas, excuse me, I apologize. So if we look at this, right, we've come down to that support. This was a measured move, 2 coordinated levels of technical support, right? And we pushed up, we got rejected back down. The key that you're looking for on this, right? So if we're looking at this level here, we need to see price get above that previous high, right? So if we look at this, Here's my little dotted line just to guide me. But you're essentially looking at 185 to 186, which is the high right here. And here, that needs to be taken out, guys. You get that to be taken out, you're going to get more short covering. There's a lot of shorts piled in this trade, and at this point it's so low. To be honest, I do think we'll start to squeeze, and this should go back to 2 to 225 on the charts. All right, lastly, guys, let's look at the Russell here. As we look through here, the Russell again is trading higher on the day. I love this chart pattern, folks. If we look at the Russell, let me just clear that away. Excuse me, I got a cough, as you can see, and it is live, so nothing I can do about that. But in any case, what we see here, look at this, and again, price is hovering above here. Same sort of deal. Almost looks like that oil chart, right? Little cup handle consolidation. My guess is the Russell is the play here as you start to see names like NVIDIA pull back and other runners that have gone nuts. Money is going to look for what hasn't participated yet. It's kind of the secondary cycle. It's the second cycle before you get a bigger market correction. You'll see the small caps try to participate. Whether they go up here, that's the bigger question. Can we see them move all the way back to all-time highs on the IWM? I'm not sure, but I continue to like that trade. All right, guys. Back we go to here. So again, folks, you can see right here the wheel. Check out the wheel of thank you, basically, of appreciation. Remember, starting next week, once we get everything filled out here, there'll be lots of prizes for you guys to win. But don't forget, on Thursday, the live drawing for that 100 ounces of silver. All you have to do is follow Verified Investing on Twitter as well as on YouTube. You guys have a great rest of your day. Thank you, as always, for tuning in. It means the world to me. Have a great one. Take care.